Well, I think the key thing for the consumer in the first instance is going to be being able to go out and do all the things that they've previously been able to do. So go to restaurants and sporting events and so on. A lot of that depends on the pace at which the economy is reopened and of course, on not having a sort of resurgence, another sort of second wave pickup in the virus. So that's one element. Another element will be how much of this additional fiscal spend that's been delivered into households' wallets are they prepared to spend versus needing to save. And then I guess another key element will be this idea that the unemployment rate is likely to probably be higher in the future than it has been in the recent past. And so there'll be a group of people who are going to be more cautious simply because there's going to be less job prospects out there. We've got in mind a U-shaped recovery for Australia, a sort of contraction in the first quarter, second quarter, a flat third quarter, followed by a rebound into the fourth quarter and into 2021. And we think that there are risks both either side of that. There are risks that it could actually come back faster into Q3. There are risks that it could be a lot more drawn out, and that's just the nature of where we stand with the economy being. There is a considerable amount of uncertainty about the forecasting at the moment.
Paul, just getting back to your point on migration, that was fundamentally correct in terms of the potential impact to growth, but not getting those migration numbers in. But perhaps on the flip side, in terms of some of the suggestions that the government is floating in terms of perhaps looking at reform measures on the economy, particularly on the taxation side, do you think that could drive growth, something like the corporate cash flow tax or something along that ilk to basically offset the losses that we are going to get in migration?
Well, certainly that would be welcome. I think, we are talking about the idea that, of course, we faced a crisis, but this also presents an opportunity for doing a lot of reform that was otherwise something we should have done anyway. I mean, keep in mind, the Australian economy wasn't really performing that well even prior to the arrival of COVID-19. We had sluggish growth, underemployment that was too high, inflation that was too low. We had capital outflow, business investment was quite low, productivity was very weak. I mean, it fell in 2018-19. So a reform agenda that included tax reform, regulatory reform, infrastructure investment, and also a focus on energy policy and climate change. I think those things would be quite helpful in terms of assisting a recovery. And so if that was to become more of a focus, that would certainly be a helpful story for Australia going forward.